Hey guys, Adam from BizNexus. Today I had a really interesting conversation with Bob Fariss, who we love over here at BizNexus. He is a veteran go-to tax transaction specialist. He's in our partner network. For you intermediaries out there, if you want to join, you can apply. I'll just go to biznexus.com. But Bob is a trusted member of our partner network, and he specializes in transaction taxes. So it's always an informative but thick conversation with Bob because he's just a wealth of knowledge because he's a veteran, but also just because of his particular niche. So today we dove into the world of transaction taxes, topic that has become increasingly relevant as deals have gotten bigger and as intermediaries have moved up market and as the tax issues and tax strategy become more and more relevant for these larger deals. Bob shared some great insights about how tax laws are impacting M&A deals in the lower middle market specifically, and why advisors are relying more and more on tax specialists as part of their deal team to navigate the complexities of transactions. We covered everything from capital gains taxes, interest deductibility, the effects of bonus depreciation rules, to state, local tax issues that can throw a wrench into deals. Bob also explained how earnouts and contingent considerations are being taxed and the importance of getting tax due diligence right to avoid major liabilities down the road. A lot of stuff. So there's a lot to take away from this one. It's packed with great info for anyone involved in M&A transactions. Might have to listen to it twice. Obligatory plug for BizNexus. If you're not familiar with us, just check us out. BizNexus.com. We have a marketplace for the solo acquirers. We have a community to find really niche advisors like Bob Fariss. You can go in and search by keyword, or the AI overlap suggestions will just do that for you and put Bob in front of you if you're out there looking for deals that tax strategy might be relevant. And then we also have our platform for teams, for private equity groups, for family offices, for corporate acquirers. That's called OmniSource. And that is something that we've been very busy with. Combines all of your on-market, off-market deals for your mandate into one seamless collaborative platform where teams can work together, our team, your team. It's been a really innovative platform has come together nicely through the year. And I think 2025 is going to be the year where we really concentrate mostly all of our energy on OmniSource, because that's been going really well. Right now, we're at the 6 billion mark in terms of committed capital that we're helping to deploy for our members, our partner members, and our concierge members who are in OmniSource. So that's a long-winded pitch. Sorry about that. Let's get into the podcast. Disclaimer from the always present legal team: podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework. All right, Bob Fariss, how are you?
Doing well, Adam. How about yourself?
Good. It's good to have you back. For everyone out there, this is Adam with BizNexus. We're here for another roundup interview, and we focus on talking with niche M&A players about the area they focus on, what they specialize in. And Bob Fariss, who we have this week, is our resident tax ninja, sage, guru. So welcome, Bob. Thanks for taking the time to be here. We'll probably spend about 30 minutes on talking taxes, because I think that's kind of where most people max out. I max out. But Bob, you're in the trenches day to day in terms of tax strategy in the lower middle market, and it's a highly relevant issue potentially moving into 2025. You're our go-to. So really excited to have you here today and to hear you kind of jump into those top items that you and I were discussing before we aired that are probably going to be relevant for not only the M&A advisors who you're traditionally working with, but acquirers, sellers, etc. But let's take a few minutes just to set the stage with you. You are working mainly with M&A advisors, I think lower middle market, safe to say. But if you wouldn't mind just touching on what you're doing day to day, who you're working with, and then we can hop into the how and the what and the why after that.
Okay, well, thank you, Adam. I am an enrolled agent, which is one of the 3 kinds of tax advisors that are allowed to represent taxpayers before the Internal Revenue Service, along with tax attorneys and CPAs. And I found out the most interesting part of what I was doing was when I got involved in M&A activities. So 15 years ago, I decided to try being a business broker with a large national franchise and since I was also a tax professional, other advisors in the company would come to me with their tax questions and I would help them out. And I found out there were things I could do for them that were helpful on a complimentary basis and other things on a contingency basis and other things on a fee basis. And that was actually more interesting for me. And I was more useful in that capacity than actually as a business broker. So I retired from my brokerage and opened this up not only to people in my company, but to all M&A advisors. It's interesting what's happened. I'll give you a little background of why this has become important. 15 years ago, we were talking about the silver tsunami. At that point, we had thought, there are all these baby boomers that are approaching retirement and they're going to want to sell their businesses. And when that happens, we were worried there were going to be so many businesses flooding the market that the valuations would drop. But as we all know, the silver tsunami never materialized. But what we see happening is those very baby boomers continue to grow their businesses and they begin to become more valuable, moving from Main Street to lower middle market. And what's happening right now is that they're starting to return there. BizBuySell reports that there's a 20% year over year increase in transactions involving baby boomers.
Yeah.
And so while there's no silver tsunami, what we're experiencing right now is the rising silver tide. And that's pushing more and more people into the lower middle market, which is more complicated. Now, add to that tax preparers are getting squeezed by automation and they need to find ways to increase their revenues. And they're trying to look into various financial services, including M&A transactions, either being the advisor directly or having someone they can refer to. So it used to be the advice was don't get involved in taxes, but just refer your client to their tax advisor for all their tax questions. But if you do that now, you may find out you may be introducing a competitor.
Yeah, losing your transaction.
Exactly. So if you have M&A advisors starting to experience the rising silver tide, then having a deal team with your own tax advisor on it makes a lot of sense.
Yeah, that's really interesting. I like the rising tide analogy. With everything with the Broker Simplification Act, right? And all the people who are kind of getting into this brokerage game now, there's been such an influx of new players, right? Accountants especially, who want to represent that transaction because of this silver tsunami, rising tide, whatever you want to call it. So that's interesting. So it sounds like you're working with professionals who are just getting involved with transactions for the first time, but then Main Street business brokers who are becoming lower middle market M&A advisors or whatever the hell they're calling themselves. They're working with larger transactions, more complex, and so tax strategy comes into not only the transaction but probably like winning the engagement, having that as part of your deck, right?
Absolutely. In fact, there are 3 places that these advisors will typically use a transaction tax specialist. The very first place is differentiating themselves from everybody else. And what they want to do is say, I'm not a lone ranger. Okay, we've got a team of specialists. So you look more like a investment banker than you do a real estate agent.
Yeah.
In fact, what I've done is I've created a PowerPoint slide, which I will give to anybody who requests it of me, that's got 10 different transaction tax strategies grouped into whether they're involved with income recognition or income categorization. And you can throw that into a pitch deck. I don't even have any of my information on it, and just say, here's an example that our tax guy put together of all the different things we may be talking about when it comes to taxes. And it helps differentiate the M&A advisor.
So the brokers are using that when they're pitching the engagement, and they're going out with a deck, either with your company and your face on it as part of the roster, or just a white label deck where they're adding
They just can throw that into their deck, and it either is a hook or it isn't, but it doesn't cost them anything.
Got it. So we'll throw that, whether it's the link or just how to get that deck. We'll put that in the show notes wherever you're watching this. That'll be down below.
Okay, we can do that. The second area where people are using me is when it comes to valuations. Sometimes the tax returns and the P&Ls just don't line up. Something doesn't make sense. The advisor wants this business, but they want to get it right. They want to understand it, and they need some technical assistance. So I get involved at this stage actually on a contingency basis because the advisor doesn't have a client. They don't even know if there's any money in it for them, and go through and analyze what's happening there financially and explain it so that we actually get what the cash flows are and we get it correct. The third area is when an LOI is presented. And often when an LOI is presented, the client says, well, what are the after-tax implications of all these terms? And with that, we have a fee-based service, which is called scenario planning. What we do is we figure out, given this set of terms, here are the after-tax consequences. But we found out that's really not as useful as then finding another set of terms, which would create a different after-tax situation. And that not only gives the client what they want, it gives the advisor some negotiating ammunition.
So you're getting in there. I mean, if it's a open auction or closed auction, I imagine that's a very different scenario for you in terms of workload, but you're getting in there and basically analyzing each of these offers. And that's when you're getting involved in the negotiation and talking about, well, this is what the offer means for, money in hand at the end of the day. But then this is what it could mean if we change these terms. And so you're really heavy on the advising once you're in the negotiation phase.
Exactly.
Got it. Alongside the M&A advisor.
That's alongside the M&A advisor. Now, that is who I am usually working with. Not always. We usually don't work directly with sellers if they don't have an M&A advisor. They're typically not looking for other advisors. The exception is when a business owner gets an offer just out of the blue. And here they want to know, well, what are the after-tax implications of this offer? And that's a scenario planning application. So buyers often want me to help them with the allocation of consideration in an asset sale. All assets are tax assets. Perhaps the most overlooked and misunderstood is goodwill. Now, goodwill is defined by the IRS using the residual method, which means you allocate consideration to everything else, and then what's left over just gets dumped into goodwill. However, that may be a poor strategy for a buyer because that goodwill gets amortized over time. And then when that business is resold, that amortized goodwill needs to get recaptured as ordinary income. It's better to ask yourself, why am I paying more than the fair market value of all the other assets? Well, it's because of some intangible things. For example, an existing customer base. That's pretty typical. So if you got a customer list and you assigned a value that you would put on the amount of business those customers gave the company, you could set up a specific intangible asset customer base, and you could amortize that. And then when the business is sold, if those customers aren't the current customer base, you don't have to sell that asset. You don't have to recapture the amortization. So some extra thought there can really mean a lot when the company's resold. Now, another aspect is when the fair market value is more than the consideration. This creates negative goodwill, and negative goodwill can't be booked, so it becomes ordinary income in the year of the sale. So you really have to take care in an asset sale how you put together this allocation of consideration, not just for the seller where you normally think of doing it, but also for the buyer, because there are tax applications for the buyers as well.
Right. So that's a good example of how you're helping the M&A advisors, and you'll sit down with the M&A advisor and their client and run through this at the table or on the Zoom. I mean, typically that's how your engagement will work, right? And so then I think it's pretty clear with M&A advisors working with larger deals, this becomes more of an issue. There's more of a need. I think that's kind of why you stepped away from business brokerage and moved into this, just because you saw that work grow as a result of that need, of that trend. What are you seeing now, right? So we're recording this end of the summer, 2024, moving into the fall. For year end, moving into 2024 and the year end, but then into 2025, obviously a lot of uncertainty there depending on which way all this goes. But what are the issues that are really, if you had to pick three issues that are popping up over and over that you think are most relevant going forward, could you speak to that?
Well, I'll tell you, there's one issue that is just outstanding that let's see if we can come up with several examples of what's going to happen. And that is that the TCJA, which is the Tax Cut and Jobs Act that Trump passed, will sunset at the end of 2025 if nothing happens. Nobody has to do anything. Congress can just be totally stalled and it automatically sunsets. So when that happens, there's going to be a lot of miscellaneous tax increases and changes in tax rates. But a big one is the estate and gift tax exemption gets cut in half down to 13 million. And this is going to put the estate planning industry on steroids, because in 2025, you can take the full exemption now, and even when it's cut later on, it's still okay. And what you're going to see is a lot going on there. Now, other things happen if TCJA will sunset. One is the pass-through deduction goes away. So all the business owners with LLCs that are paying their taxes as an S corporation or a partnership may have an extra incentive to sell in 2025 because their taxable income is just going to go up for the loss of that deduction. Depending upon how progressive the new Congress is, they see most of our strategies as loopholes that need to be closed. So things that we use, such as real estate exchanges and trying to take advantage of reduced capital gains rates for individual, they want to take all these things away. And the uncertainty from all these potential changes, even the ones that occur if nothing happens, are causing tax strategists to have unusual conversation. We usually talk about ways to do income deferrals. That's a classic kind of tax strategy. But right now, we're even talking about ways of doing income acceleration, because it may be advantageous to bring income into 2025 rather than have it taxed at higher rates in future years. And the tax strategy is becoming much more complicated and going over multi-years.
And so without getting political, right now we don't have certainty on that, but as we move into November, if there's clarity and it goes in the direction of this all sunsetting, that's going to impact valuations day one, right?
Yes. And in fact, that one of the things that concerns people the most is this idea that whatever it is, it's close and nothing happens and the sunset happens automatically. So this makes it a very real possibility.
Just scary because nothing's really getting done anyway. So the idea that nothing would get done is not only a possibility, but could be a probability. All right. So you'll be busy. What else? Any other big issues moving into 2025?
Let me tell you how I kind of like to sum this up, if you don't mind, without getting too complicated, because, we get into uncertainties. It's a little unusual. But if TCJA sunsets, my recommendation is get to know some estate planners, because they're going to have to jump through hoops, and they will probably be coming up with some pretty cool strategies as well as some huge potentials in 2025. If TCJA doesn't sunset, get to know some estate planners. One of the things that's developed over the past 2 years is the resurgence of the installment sale agreements. And what you can do with a advisor who can sell these things is set up, for instance, if you have a service company with a lot of goodwill, the goodwill, instead of going to the seller and getting taxed in the year of the sale, will go to an insurance company. And the insurance company will basically buy an annuity for the seller, and they only pay tax on the installment rule, which means you only pay tax on the income you receive in the year you actually receive it. So this This is a idea that went away, that has come back and can be very meaningful. But most importantly, if you think you're going to be surfing the rising silver tide, that's best done as a team sport. And my best advice for all the advisors is to put together a great team that can be your team and continually promote them.
I mean, which is where the lower middle market has gone, right? I mean, that's where even all the franchises have adopted this model. With the larger transactions, you wind up getting forced in that direction.
Absolutely. You want to be able to be a team.
Yeah. I imagine going forward that it would be beneficial for advisors to hear these kinds of updates on a regular basis with whether they have current engagements or relationships that could become engagements. Everything that you're talking about is highly relevant for a business owner who's thinking about anything. Is it now? Is it 5 years from now, 10 years from now? We'll have you on at least once a quarter, but do you have any other speaking engagements on an ongoing basis, or how can the M&A advisors find you, whether it's just meeting or tuning into a regular webinar so they can stay on top of these issues?
Well, the most regular communications I put out is actually updates on LinkedIn, on both my LinkedIn site, Bob Fariss, as well as my business site, Build Value Here. So if you went into either one of those and either follow me or subscribed on the company, you would be getting my monthly articles on various aspects that are happening as they're happening.
Yeah, we'll drop that link in the notes as well. And then kind of a shameless plug, you can also find Bob in our community. It's community.biznexus.com, and just search for Bob. But you can also find some good estate planners in there. So if you just keyword estate planners, you'll have a list of estate planners who are working in the M&A world on a regular basis, and you can kind of vet and choose from there. Bob, what's the best contact info for you? We're going to put this down in the show notes, but how would you prefer people reach out?
Well, the easiest way is you can send me an email, tax@buildvaluehere.com.
Got it. And buildvaluehere.com, that is, we should have said that as we kicked off, but that is your company. That is your new entity going forward in the world of just tax transaction strategy. All right, Bob. Well, this has been really beneficial. Anything else before we close out?
Adam, it's been a pleasure. We got to do this more often.
Always is. Once a quarter at least on this one. And then if we have a lot of questions, certainly from the M&A advisors, maybe we have a filler.
Excellent. Okay.
Perfect. All right. Bob, we'll see you next time. Again, thank you for taking the time, and have a great one. See you next time.
All right. I'll catch you later.
Hey guys, thanks for listening. So if you're not familiar with BizNexus, please be sure to check us out at biznexus.com. We have multiple solutions for business acquisition. For do-it-yourselfers, we have an approved access-only marketplace with thousands of acquisition opportunities that's updated daily. We usually have about 20,000 active acquisition opportunities in the marketplace at any given time. We also have our community where you can network with people probably just like the one you listen to on the podcast, and search by keyword for potential niche partners or members of your deal team, or just let the AI overlap suggestions take care of that for you. And the really innovative solution that we've been working on, where we're spending most of our time these days, has to be OmniSource, and that's a deal sourcing platform built for teams. We built that for corporate development teams, family offices, and private equity groups, and it combines all of the on-market and off-market targets for your mandate into one streamlined, stupid simple experience. We're currently helping to deploy over $6 billion in committed capital between our partner and concierge members on that platform, but we have been opening that up more to individual repeat acquirers and should keep going in that direction as we move into 2025. So if you're interested in a demo, you can schedule that directly from BizNexus, right at the top right hand of the site, biznexus.com, or visit omnisource.ai and schedule a demo from there. We're just kicking this podcast thing back up and we're shaking the rust off a bit. So if you like what you just heard, please, again, spread the word, give us a review or some stars so we can feel good about putting more effort into the content going forward. That's it for the promotion. Thanks again for listening.